Hi, I'm Bill Schmick. Welcome to 30 Minutes.
Welcome back, and I'm Bill Schmick. And today, we've really got an exciting subject for all of you, especially for those who are getting into retirement or thinking about it. Because today, we're going to talk about your money. And specifically, should you be managing your own money, or should you hire someone to manage it for you? And we're going to give you all the ins and outs to doing this. And we'll do this in English, I promise you. And we've got two great guests today. We've got Brian Vogel, he's at Manchester Capital, and then we have Chris Aiello from Atlas Private Management. And these two guys and myself are going to try to kind of lift that blanket and provide you a clear view of the things that you're going to need to know in your quest for deciding whether or not that you're going to manage your money yourself, that you're going to ask a broker to do it, or you're going to ask a money manager to do it. And the first question you might have is, what is the difference? And that's why the show is entitled Brokers, Money Managers, and You. So let's get started. So Chris, tell me what you do.
I'm a wealth manager with Atlas Wealth Management in Manchester. What does that mean, and what do I do with and for my clients? I manage their money. I've been doing this for about 23 years. And as a money manager, I try to provide the best investment advice I can to help my clients keep, protect, and grow their assets.
Okay. And Brian, what do? Do you do the same thing, or do you something different?
No, very similar.
Similar.
Yes, wealth manager. We pride ourselves on, I work with Manchester Capital, and we pride ourselves on growing wealth responsibly, protecting our clients, helping them create a legacy and pass wealth to the next generation, educate the next generation. We handle pretty much anything that touches their financial world, we get involved in.
Okay, so that's a larger concept in a way. I noticed that you have three initials behind your name, CFA.
Correct.
And you don't.
No.
What is it? What's a CFA?
CFA is the Chartered Financial Analyst designation.
Yes.
It's a professional designation. You have to pass a series of exams. There's 3 exams. I was fortunate enough to do it in 3 years. They're given once a year. And it qualifies me to be a financial analyst.
Okay.
If I wanted to work on Wall Street analyzing stocks and analyzing companies, that's pretty much the designation that you need. It applies in the field of wealth management because it gives me the ability to look at certain securities with particular insight.
So is that like getting an MBA?
Similar.
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 Oh, okay. And we all know what a Master's of Business Administration is. Okay. So you're a money manager, you're a money manager, but neither of you are brokers. Okay, and here's an interesting thing that maybe you can clear up for me. We all know what a broker is, and yet I haven't heard that specific term, broker, for decades. Now, we all know Merrill Lynch is a broker, Charles Schwab is a broker, TD Ameritrade is a broker, but no one now calls themselves brokers. They, in fact, call themselves wealth managers or asset managers or
financial advisors.
Please help me out. What's the difference between the two, you guys and brokers?
Well, the nomenclature in the business is varied, as you just mentioned. A broker, by definition, under the Securities and Exchange Act of 34, is one who transacts business for another and is receiving commissions. So that is the textbook textbook answer of what a broker is.
Okay, what does that mean in English?
That a broker will transact in investment accounts for their clients and receive commissions.
Okay, help me out here. So a broker takes your orders.
Correct.
But I have to decide what to buy, what to sell, right?
The broker can bring you ideas, but you have to approve them.
Okay. How is that different from what you guys do?
We work on a discretionary basis, meaning that you give me rough guidelines, we work together to discuss the guidelines around which I'm going to manage your money, and then I can go ahead and execute on my own. As long as I stay within those parameters, we're fine, and I don't need to tell you what I'm doing because we've already agreed to it up front.
You too? Same
Yes.
thing. Okay, so,
Absolutely.
okay, I got it. I think I got it.
One other important difference,
Yes.
instead of working on commissions where I make money every time I trade, we work on a fee based on assets under management. So if I'm managing $1 million for you and I charge a certain percentage of that as an annual fee, and then I don't charge you anything else.
Okay, so a broker, I have to know I want to buy Apple. I called my broker. He charges me a commission to buy it on that occasion.
Correct.
Okay, but it's my decision, and it's my decision when to sell it.
Correct.
Sure.
In your case, if you decide you want to buy Apple, you don't have to call me because I'm already paying you to do that.
Correct.
So you'll buy it, you'll sell it. You'll in fact take the responsibility of managing my money off my shoulders, and you do that for a fee.
We do.
Yes?
Correct.
Okay, so we're getting there. Now, I've heard two words that confuse me: fiduciary and suitability. Okay? And I hear them coming out of my ears all the time, and I'm not really sure who's a fiduciary, and what does that mean, and suitability is something that I hear brokers talk about, or the brokerage community. Can you explain that to me?
As a registered investment advisor, which Brian and I, we work for, and we are investment advisor representatives of our respective firms, we have a fiduciary duty under that gamut to provide investment advice that is in the best interest of our clients. So we put our clients' interests first, not our interest as advisors first. So we have a legal obligation, we have a duty to provide that advice in their best interest as a fiduciary. And that is the fiduciary standard.
So that's like lawyers have that.
Correct.
And accountants, a lot of accountants have that. So you're saying that money managers, whatever money managers are fiduciaries as well.
Correct.
Okay.
And not all money managers currently are fiduciaries. Again, some are, some are not.
Well, how do we find that out? How do, if we're interviewing people like yourselves, we have to ask that question.
That you have to ask that
Okay,
question.
you're hearing it here. You've got to ask that question. Okay, Brian.
One of the big differences, a non-fiduciary may recommend something that they're going to make a lot of money on that may be good for you, may not be good, may not be in your best interest. We can't do that. Any advice that we give you has to be in your best interest.
Okay. So explain this term suitability to me and how this comes about and where and how.
So suitability goes back to, it's legislation that dates back quite a while, but any investment that is recommended to you has to be suitable for you. So appropriate for you to own or hold.
Okay.
Okay. And that's where the suitability comes from.
Well, why I'm asking you that is because I've heard that in the situation of a broker, that they do not have to be fiduciaries. All they have to worry about is the suitability, and this is what you're referring to.
Correct.
So if I'm a broker, and my 75-year-old mother who knows nothing about finance or investment or so forth, and she says, what should I buy? And I, as a broker, and I say, well, you should buy this 2-cent biotech stock that's going to go through the roof in about a week. That would not be suitable for my mother or grandmother. Is that the idea?
Potentially not. It might be too volatile or too risky for somebody in that situation.
Okay, and then I could, or she could go after the broker if that were the case.
Correct.
I'll give you another example. Sure. I'm recommending I'm a broker, I'm recommending a mutual fund to my client that its performance is okay, not as good as the market. The market goes up, it goes up less. If the market goes down, it goes down more. Okay, and it's expensive to buy and sell. But it's in fixed income, it's in bonds, and my client is retiring. Even though it's high cost and poor performance, that would still be a suitable investment.
Based on risk metrics, yes.
That would be a suitable. It may be the least suitable within the suitability standards. However, it is suitable in that fact pattern. Is that in the client's best interest
Yes.
to do that? No. Is it suitable to do that? Yes.
All right, here's another one. Okay, then we've just learned the difference between fiduciary and suitable. Then it sounds to me, once again, the onus is on you out there to know the difference and ask the broker or the money manager what they are and how they invest or trade for you.
Correct.
So it's once again my issue.
Yes.
Okay. I think we've already gone through how a broker makes money. They make money by buying and selling mutual funds and stocks and so forth. Is there a set fee commission on buying and selling mutual funds or stocks or anything else, or is it like whatever they can charge you, whatever you will willing to bear?
I believe the commissions do have a cap. Top of my head, I don't know the cap per se. In the mutual fund arena, you may be looking at, and we may talk about the commissions on mutual funds on loads on the front end level and back end can be as high as 7% on that particular mutual fund. So is that suitable? Again, fine line, but they do get paid via commission on funds that have commissions and also on annuities.
And there are other products, especially when you get into the insurance industry, annuities, for example.
Oh, wait, we're going to get into that.
Okay.
But I caught you in jargon. Front end?
My apologies.
What is?
Yes.
What are we talking about? I've heard it front end, back end. What does that mean?
Right. With mutual funds, you can purchase mutual funds that do not have any commissions, and in the realm of registered investment advisors, that is how we operate. We will have our clients invest in mutual funds that are called no load, so there's no sales charge to that client.
And no load. Load means there's a charge.
Correct. Load means commission charge, and so with loads there are three types where the client pays a commission up front. The front-end load pays a level commission throughout the life of owning that fund, and then a back-end load. They receive that load, or they are charged that load, when they sell the fund.
Are they all the same loads, charges, or do different mutual funds have different charges?
It can vary from fund to fund within the same fund family. So take Fidelity funds or Vanguard funds or any of them, if they have an international fund, that can have a different load than an S&P 500 U.S. large cap stock fund. So it can vary all over the place.
So once again, viewers out there, we've got to watch now loads, okay, on mutual funds. Which, are the loads substantially different? For example, give me one of the highest mutual fund companies' loads. I've heard American funds are very high. Yet at the same time, I've also heard that American funds is one of the largest mutual fund companies in America. Now, maybe I'm cynical, but maybe the way they got to be one of the largest mutual fund companies in America is these loads.
American Fund's a great fund family, so we're not here to pick on any one particular fund family. However, their distribution channel is via brokers. So brokers sell those funds to their clients, and they receive a commission on that sale.
All right. Do you both use mutual funds?
We do.
Yes.
Okay. Do they have these kind of loads and so forth, and do your clients have to pay them?
No.
No.
Nor do our clients.
And again, the reason being, as fiduciaries, we have to do what is in the best interest of our clients.
Okay.
A sales commission, front end, back end level, is not in their best interest. So as a fiduciary, a legal obligation not to.
Go ahead.
It's probably similar at your firm, but we try to, because we use certain funds across our client base, we tend to try to get up into what are called institutional share classes, or larger dollar volume share classes, where all the fees are much, much lower. There are no loads, marketing fees for the funds are waived, and even the portfolio manager who runs the fund, their fees are lower.
I see.
So we try to save clients money by doing that.
These
Similar.
Okay, so there's a class of mutual funds that you use that are cheaper than the same mutual fund, but a different class.
Yes, exactly.
Okay, so, all right. Now, you both said that you guys make your money by charging a fee on the amount of money that your clients entrust to you.
Yes. Correct.
So if, let's say you had a 401k and you managed to accumulate $200,000 over 25 years of savings, and I came to one or the other of you, there would be a fee that you would charge based on the fact that I had 200,000.
Correct.
And if I had $1 million, that fee might be less.
Correct.
So the more money I bring to you, the less the fee.
Correct.
That is typically how that works on the fee side of the business, that
Okay.
it's economies and a sliding scale, that the larger the assets under management, the lower the fee.
Okay. So that's pretty much a universal
Correct.
rule in your business. All right, to muddy the waters a bit, what's a financial planner? I hear all the time that I'm a investment advisor / financial plan. What's the difference, and can you be both a money manager and a planner?
You can.
You can.
What a financial planner does is they look at your assets that you have, and they plan out your future as far as spending, especially in retirement. Do you have enough money to make it last? What spending level will sustain you until the actuarial tables say that you're likely to die?
Okay.
And so that's what a financial planner does. And typically they look at cash flows over time, and they project different rates of return on the assets that you have to make sure they're going to last.
Okay.
A financial advisor actually manages your money. So you can do both. You can be a person who's managing the assets and investing them, and also looking at planning for the future.
Okay, so you're wearing two hats. I assume you have to have sort of two educations, a financial planning education and...
There is a certified financial planner designation that you can get.
Okay. So there is a possibility that I could be a financial planner and a money manager.
Correct.
Okay.
Yes.
And when I talk money manager, the real proper term is registered investment advisor. Is that the proper term for a money manager?
Correct. For the firm, yes.
For the firm, yes. Money manager is a broad, sweeping term, and so in the investment lexicon, there are many names out there. But in terms of specifics and registration, a registered investment advisor is an entity. So that is the business, that is the corporation. The individual that works for the registered investment advisor is a IAR, is a investment advisor representative. So they have to pass a test, or securities registered with a Series 65, and they work under the umbrella of the registered investment advisor.
So you're both that.
Yes.
Yes.
Now, under the guise of knowing who you're working with, there are firms out there like ours that their primary skill set comes from the investment side. There are also a lot of firms out there that are financial planning firms that also do investments, and they will lead with financial planning. They'll build out a financial plan for a client and then say, by the way, now that you have this plan, we can invest your money to make sure that you meet that the plan works for you.
Okay.
Their primary skill set is financial planning, not necessarily investment advising. So, and frequently those firms will charge different. They'll charge you for the plan, and then they'll also charge on the investment management side, but it's a combination. So you really need to ask who you're working with and what their primary skill set and what their qualifications are.
So, being cynical as I am, I'm a financial planner. I could, you come to me, I can charge you for the financial plan, and inside the financial plan, I say, oh, well, you also need a new money manager, and you need life insurance, and you need disability insurance, and you need
Sure.
And I can sell you all those things.
Correct.
That's a pretty good deal.
Correct.
Okay, so once again, it's buyer beware,
Yes.
right? There's a difference. So,
There is a difference.
and you mentioned certified financial planner. Is that different than just a simple? Is that another way of screening?
It's an industry designation that says you've gone through a course of study to be able to put together a financial plan for someone.
Are they fiduciaries? These certified financial planners?
They are fiduciaries within the College of Financial Planning. So being a certified financial planner, yes, you are a fiduciary. However, that said, again, if they are selling insurance or selling annuities and receiving commissions, so there is a hybrid So again, if we're looking at how one is paid, there is a fee-based pay structure versus we do a fee only in terms of managing assets and receiving a fee for assets under management. You can receive assets under management and then charge for a financial plan, which may be a fee, but also you may get paid on annuities, you may get paid commissions on funds, and also on insurance. So again, one has to be wary of all those moving parts.
So what you've just unearthed for me is there's a big difference between fee only and fee based.
Correct.
Meaning that you pay a lot more possibly if someone you're talking to is fee based as
Correct.
opposed to fee only.
Right.
Okay.
And fee based.
To the general investing public sounds like you just earn a fee.
Yeah.
So the second part of that equation, based, is what makes that fee only and commission. So the fee based. So
Write that down.
One needs to be wary of that.
Fee versus fee only. Fee based versus fee only. Okay, the big difference there. I had another question. Can a broker also be a investment advisor? Is this possible? I mean, is there a melding of the two?
Titles in our industry tend to be a little bit all over the map
Why is that?
because there aren't any real hard and fast standards or rules for what the titles are.
Okay.
Wealth manager, wealth advisor, wealth strategist, financial advisor, broker tend to be, sort of all over the map. So you really need to ask beyond the title, what are your qualifications? Are you a fiduciary? To unearth who you're really working with.
Okay. We're getting there. What other questions keep it going. What other questions do you have to ask as you walk into this person?
Right. So if I'm looking to hire a financial advisor, there are, and I've used that term broadly, there are, a set of questions. Are you a fiduciary? Right. What is your background? What are your credentials? If you are a fiduciary, may I have a copy of your ADV registration form? So
What's an ADV?
that is a registration form that is submitted to either the SEC or state regulators, and that gives the background on the registered investment advisor and also the advisors that work for that entity. And so it gives their bio, their background, where they have worked. If there are any black marks on their professional background, that's an important document to have.
That's like the thing that we never read on the back of our credit card bill.
Correct.
In fine print.
Sure.
That's what an ADV is. Okay. ADVs, put that one down too. Well, go ahead.
Other questions to ask. How do you make money? What are the source of your fees? Are there any hidden fees or other things that you might expect to pay? Do they get compensated in any other way? Are they compensated by the mutual funds? Are they compensated by, do they have soft dollars? Are they compensated by the firms where they do their trading?
That's what soft dollars means?
Soft dollars, yes.
Okay. Well, listen guys, we have to come back and do some more of this, okay? So in our next segment, I want to talk about some of the changes that's going on in the financial sector that's heading, I guess next year we're going to see a major change, and talk a little more about some of the stuff that we're talking about, maybe flesh it out. You wanted to talk a little bit about annuities, which is a big mind-numbing subject that we should. So listen, stay tuned, and we'll be right back. Thanks.